everyone, and welcome back to the channel. Today, we're talking about something that sent shockwaves through the finance world. Coinbase, the giant crypto exchange. You might have seen headlines that their stock just crashed after their latest earnings report. I'm talking about a massive drop, over 11%, wiping out about $11 billion in company value in a flash. But here's the twist, and it's a big one. While their stock was plummeting, Coinbase actually reported stunning profits that blew past what Wall Street expected. Confusing, right? We're going to break down exactly what happened, why these numbers are so wild, and what it means for Coinbase's future. And trust me, you'll want to stick around to the very end, because I'll reveal the full details of their ambitious plan to completely transform their business. A plan that could change everything we know about investing. You definitely don't want to miss that. So, let's dive into these wild Q2 results. On one hand, Coinbase's stock price took a nosedive, plummeting a significant 11% right before the market even officially opened. It was set to open at its lowest point in about a month. This was a huge deal, especially since the stock had already gained over 50% so far this year, outperforming the S&P 500 index that it just joined in May. Investors were clearly spooked. Why the panic? Well, their revenue came in at $1.5 billion, which was a miss. Analysts were expecting closer to $1.6 billion, so they fell short of those expectations. Now, here's where it gets really interesting. When you look at their overall profit per share, some reports said it was $5.14 per share, absolutely crushing analyst expectations by over 240%. That sounds amazing, right? But then other reports focused on their adjusted profit, which was only about 12 cents per share, much lower than some estimates of around $1.49 per share. Talk about mixed signals. The key here is that the huge reported profit number was mainly driven by some big investment gains. Coinbase made a whopping $1.5 billion from its investment in a stablecoin issuer called Circle, plus another significant gain from its own crypto investment portfolio. So while these big gains padded the overall numbers, investors were clearly looking past them to something else, and that something else was the core problem, their main money-making engine, trading. Their trading revenue plunged nearly 40% from the previous quarter. Yikes, that's a huge drop for a company built on trading. But why did trading volumes fall so much, especially when crypto prices like Bitcoin and Ether actually reached new yearly highs during the quarter? I'll explain that next, and trust me, it's not what you think. So, we know trading revenue was a major disappointment. Their total transaction revenue came in at about $764 million, missing analyst estimates by a noticeable margin. This wasn't just a small dip, it was a significant slowdown in the very activity that forms the backbone of Coinbase's revenue. Retail crypto trading volume stayed sluggish, and overall crypto asset volatility fell by about 16%. What does that mean? Fewer price swings mean fewer trading opportunities, and fewer opportunities means less trading activity. Think about it. When the market isn't going wild, many everyday investors just choose to hold on to their digital assets, waiting for bigger returns rather than constantly buying and selling. It's like waiting for the perfect wave instead of paddling around in choppy water. Plus, there was a shift in focus in Washington towards other issues like tariffs, which meant speculative trading by individual investors on big crypto exchanges like Coinbase actually declined. Even though big money like crypto exchange-traded funds and treasury companies was still buying, it wasn't enough to make up for the lack of activity from everyday traders. This slow trading environment is a huge challenge for Coinbase. Their entire business model is super sensitive to how much crypto is being traded and how wild the market swings are. It clearly hit their overall results hard. Analysts had actually predicted a weaker quarter, knowing that the market enthusiasm from the previous quarter, when traders were super optimistic about potential new regulations, had cooled off. But it's not all bad news, though. Coinbase has a secret weapon that's actually growing. Stick around to find out what it is and their bold plan for the future, which could completely change their business model. Despite the trading slowdown, there were definitely some bright spots in Coinbase's report. Their subscription and services revenue provided a much-needed boost. This part of their business, which includes things like stablecoins, staking, and custody services, grew by about 9% year over year. And the real star here was stablecoin revenue. This category alone grew by a huge 38% compared to last year, reaching about $332 million in Q2. Why the surge? A lot of it has to do with the growing interest in stablecoins themselves and the successful public listing of Circle, the company behind the popular USDC stablecoin. Coinbase has a sweet deal with Circle where they get a big cut of the revenue from USDC held on their platform. This is a massive win for them. What's even more exciting is Coinbase's vision for the future. They're not content just being a crypto exchange. They announced plans to become an everything exchange. That means expanding far beyond just cryptocurrencies. Imagine trading tokenized US stocks 24/7 with instant settlement. They're also looking to get into prediction markets, derivatives, and even early-stage token sales. The idea is to bring all kinds of assets onto the blockchain, creating a faster, more accessible, and truly global economy. This everything exchange will launch first right here in the US, with international expansion to follow as they get regulatory approvals. This pivot is super smart, especially with the favorable regulatory environment. We saw the Genius Act signed into law, creating a clear federal framework for stablecoins, a huge win for Coinbase. Plus, the Clarity Act was passed that helps define crypto classifications and roles for regulators. These are monumental milestones that could unlock massive new opportunities for Coinbase and the entire crypto space. They even announced a partnership with JP Chase that will allow customers to link their bank accounts directly to their Coinbase wallets next year. While these future plans sound exciting and the stablecoin business is booming, what do market experts really think about Coinbase's current value and its prospects? You won't want to miss the final segment where I break down the big picture and reveal that crucial piece of information I promised you at the beginning. So, where does this leave Coinbase? Their stock has been on an incredible run this year, up over 50%, significantly outperforming the broader market. That's a strong testament to the buzz around crypto. However, some analysts, like one from Morningstar, believe the shares are significantly overvalued. What does that mean? It means they think the market is expecting way too much growth from Coinbase in the future, and its stock price is currently about 18 times its adjusted earnings, which is quite high compared to other financial tech companies. The biggest challenge ahead for Coinbase is whether they can reignite trading volumes. The crypto markets need to become more volatile, or they'll have to rely much more heavily on their growing subscription and services business to drive future growth. While we saw a surge in crypto enthusiasm in July after the Genius Act, which pushed Bitcoin to a new record high, the question remains if that will be enough to bring back consistent retail trading activity. On the bright side, Coinbase has a rock-solid balance sheet with about $9.3 billion in US dollar resources and about $1.8 billion in crypto investment assets. This gives them significant financial flexibility to pursue their ambitious everything exchange plans and navigate market shifts. This is the big reveal I promised you at the beginning. Coinbase is betting big on transforming finance itself, moving beyond just crypto trading to being a bridge between traditional money and this entire new world of digital value. As Coinbase's CEO Brian Armstrong puts it, we're building a bridge between the old world of finance and the new world of on-chain value. The journey is complex, but the destination is worth it. For those who believe in that vision, Coinbase's next chapter could be incredibly exciting. And that's the breakdown of Coinbase's Q2 earnings. What do you think about their everything exchange plan? Let me know in the comments below. If you found this video helpful, please give it a big thumbs up. Don't forget to subscribe for more insights into the financial markets and hit that bell icon so you never miss an update. Thanks for watching, and I'll see you in the next video.